Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick. No Joel this week, unless we decide to call him on the fly, but he's up vacationing, enjoying the sights of northern Michigan. But we are here with you because the market never stops, and neither do we. So on the show today, we're discussing, we got a couple earnings, BlackRock and JB Hunt. Netflix, of course, today after the bell. Also, the news this morning that Nelson Peltz is fighting for a board seat at Procter & Gamble. We're going to recap some of the trading action from Friday. Got some stocks hitting some 52-week highs this morning as well. I also am wondering if Blue Apron is the worst IPO of all time. And of course, we will take your questions in the chat. Our guest today is the one and only Scott Redler, Chief Strategist at T3 Live and the T3 Trading Group. Dennis, how was your weekend?
Not too bad there, Spencer. I had it on mute. I pulled the old Joel. I had to do it for him, though, because he's away this week. No, it's good. Just did a little bit of boating, chilled a little bit, out with the kids. So, kids makes it a busy weekend always. So, how was your weekend?
It was pretty good. I saw Spider-Man, and I can't complain. It was very good. I enjoyed it. There was 6 different Spider-Mans, I think. I don't know.
That's what I was going to ask.
Yeah, I think there are 6 different ones.
I remember watching Spider-Man at the movie theater like 20 years ago.
No, it was 15. I looked it up. It was 15.
How many? And there's 6 of them now. What's the difference between these 6 movies?
Well, this one takes place like he's younger, so he's like he's
a prequel.
No, it's not a prequel. It's not his. First of all, he's like 15 years old. Second of all, it's not his like origin story. It's like he already has like his powers, and the whole thing is it takes place within the Marvel Cinematic Universe. So Iron Man is there, Captain America is there. Spoilers if you didn't see it, but Iron Man's in it, and so it takes place within that universe. So, but it was good. I enjoyed it.
Yeah. See, as a non-comic book fan type of guy, I just don't get why there's so many of them. I know there's like 10 Batmans
because they make money,
10
Dennis.
Supermans,
they make money.
10 I know they make money. I don't doubt it. I mean, I look at the movie theater and what's playing. It's all superhero movies.
Yes.
I mean, everybody's into superheroes nowadays, right? Because there's nothing else. I mean, like I don't ever get a chance to go to the movies with 2 kids, anyways. But if I did get a chance, I'd have to watch a superhero movie because that's all it's playing.
Exactly right. Exactly right.
So I guess that's what's popular. Superhero movies.
Yes.
So remake them all.
But let's get to the market now. 3 minutes on Spider-Man is enough for one trading show. So what caught your eye on Friday?
Interesting close. Usually there's not much just on a Friday. A non-option expiration. You have weekly options, but for some reason there was some big imbalances in some of the MLPs, and you had some huge gap ups on the close. Check these out. So to bring up the charts of these ones, TCP just trading happily at 57.31, gaps up on the closing print to 59.30, gapped up 20 or 2 points. You're talking about a 2-point gap up there. I'm trying to see where the size is. The size, I don't have it there, I think, but it had to be significant. I mean, stock gapping up $2. So that was one of them. MMP was another one. It gapped up $1.25 on the closing print. Again, right before the close, $7.59, happily trading at $70.98. And then boom, closes 72.25. I actually did not notice these, so I'm thinking these might have flipped at the last second. I'm not exactly sure why they didn't get offset. By the high frequency market makers usually come in and offset them all. I don't know what happened on these 5 or 6 ones that gapped up that I'm going to give you, but these are big moves on the close. BPL gapped up $1 on the close. You had MPLX gapping up over 1% on the closing print. EEP was another one, and NGL was another one as well. Actually, I noticed a couple of them, and then I had one of my Twitter followers there, and I'll just give him a shout out there. It was 382SR00 was asking me why all these stocks gapped up, and reason I don't know. It's usually just the cause is simply just huge buy imbalances. So there were some buy imbalances at the close that made them gap. Question is, why didn't they get offset? Usually these get offset and they didn't. And, second question is why is it all kind of in the MLP land? So anyways, regardless here, when you see these gap ups on the close TCP, gapping from 57.30 to 59.30, pure order flow reason, usually they tend to retrace. So I would expect some of this move to give back as early as right away. Like even after hours, some of these stocks were already trading down. So I don't think TCP is going to hold on to the 59.30 close. I see it probably giving back $1, maybe even $1 on the open. But, you have to see where it goes. But if you were selling on the close, you're pretty happy because you got a pretty good price on these 6 stocks.
But other than anticipating for this morning, there's nothing really you're doing differently Friday when you're watching this happen, right?
No, and I didn't. And these are 6 stocks. You got imbalances on everything. I usually focus on the S&P 500. So unless it triggers like one of my filters or scanners, I'm not going to notice this. And it didn't trigger it off the bat. That's why I'm wondering if these flipped right at the last second or something like that. That I didn't notice them ahead of time, but I noticed them when they gapped up. So I noticed like a couple MMP because those hit my scan. I was like, whoa, that had a huge gap, but I didn't notice the imbalance that would be causing the gap off the hop. So usually, like I said, high frequency market makers will come in and, these things when they got a pretty big buy imbalance might gap up a nickel or a dime, not 2 points on TCP. It's an MLP that typically doesn't move that much. I mean, if you just look at the previous day's range, it was only 80 cents. For it to gap up 2 points on the close, this is a huge move for this stock. 6.34% dividend. These things are more stable. They're stable stocks. So that was just a huge move. If you're out there shorting the close, you're probably going to make some money.
Huh. Interesting. All right, let's move on to some of their earnings for this morning. We got 2 big ones. BlackRock reported their Q2 EPS of $5.22 versus a $5.39 estimate, so they missed that. Sales $2.97 billion versus the $3.01 billion estimate, so they missed on the top and they missed on the bottom. Did BlackRock?
I mean, stock's just been an absolute monster since the financial crisis. Go back to 2010, the stock was under $150. It did dip back during when we had that European bank crisis back in 2011. Got back down to 137. Pretty much been straight up since then. I know we've had some pullbacks. We've actually did have a 100-point pullback back in 2015 when they were selling. That was the oil crisis. When oil, actually, no, 2016 was the oil crisis. I don't remember what the 2015 crisis was. But trend is your friend. The trend is still up. It's been in breakout mode since it went above $400 here. Recent breakout was from 430. We are retesting that here this morning. We have traded an odd lot at 430. Actually, an odd lot went all the way down to 425.50. But I think, just as much as I was saying overhead supply on all these other stocks that were gapping up on good reports, this one's gapping down on, maybe it's a little bit of a disappointment, but I'm going to say underneath demand. And I think the 420 area, absolutely enormous. If it gets down to there, I think you find some buyers. And there's just a lot of people who may have been shorting this, or a lot of people who maybe want to be in this stock that are probably going to be there buying the dip.
Anything as far as resistance or no? I mean, there
can't. No, because the stock's going down here. Okay. So if for whatever reason it got, the losses back here today or decided to turn around, yeah, the 438 level has been big. We've got 3 highs right in the same area. 438.85, 438.57, and then the high from just 2 days before that, 436.52. So call 438, 440, round it up to 440. Big psychological whole numbers. If it went back in rally mode, I'd expect some resistance there, but it's trading down 5 points here this morning. I don't know if we're going to be turning around and going up there, but the market's funny. Who knows?
All right, let's look at the other really big report for the morning. Not a pretty light morning, got a heavy week as far as earnings, but light this morning. JBHT did report around half hour ago. Q2 EPS 88 cents versus 92-cent estimate. Sales of 1.73 versus 1.74 billion dollars. So they missed that by a hair, and they missed the EPS by 4 cents.
Down $1.73 in the pre-market. We're trading right around $90. Again, this is light volume, 550 shares, just as much as I should say the BlackRock was light volume, only 1,700 shares. When you see only that many shares have traded, it means price discovery is still happening here. So they're still trying to figure out where they want it to go. Now, it's being offered down at 90.50. Nobody's rushing in to buy those 90.50s, which makes you think it's going to go down. But the best bet on JB Hunt is way down $86. So that's telling you that this is still trying to figure out where it wants to go. The person that's bid in 86 is using basic support resistance here because 86.06 was your low on the 26th of June, and on the 21st of June you had 86.04. So you got 2-3 lows just jumping out at you at $86. So the person that's been there saying, hey, 86 is going to hold. I'm willing to take a risk here right now, early in the price discovery process, and I'm bidding 86. I agree with him. I think 86 holds too. I don't know if it's going to get down that low here on JBHT, but if it does, I think 86 is a good level.
I'm going to throw you under the bus here. What do they do?
That's transportation.
Okay, that was an easy one, and you passed. Okay,
you can see those. Yeah, you can see those. Yeah, you can see them when you're traveling on the road. The JB Hunt trucks.
I was just checking to make sure you're awake, and you are awake.
I'm not really awake, to be honest with you, but I'm trying to wake up.
Okay.
Normally, Monday morning groggy. The kids have been crazy all weekend.
What about this Procter & Gamble news this morning that Nelson Peltz is trying to get himself a little bit of a spot on the board there? His firm has filed a proxy to elect him to the P&G board. He says he's not calling for a breakup, he's not calling for R&D cuts, he's not calling for management replacement, but he does want to unlock that shareholder value in P&G.
When he took that original position, do you remember? That was when it was disclosed in the 45.
Let me look for that.
I think it was back in February, wasn't it?
Let me look.
Go to the Pro. That's the nice thing about Benzinga Pro is you just type in PG. You can scroll through all the previous headlines and you can find out what I'm talking about here. But I remember it popping like $3-4 because Peltz got it. And I'm like, this is Procter & Gamble. This is a thick stock. It doesn't move a lot. It's defensive. It's value stock. For it to pop 3 or 4 points just because Peltz took a position, I was challenging that all day. And I was glad I did because it was trading like 92, maybe even 93 in the pre-market. And it came back in within, it came back in that day a little bit, but obviously came back down within a month later. It was way down back at the lows of the year. So, Peltz has an influence, especially if you're in a smaller, company. But when you're in something as big as Procter & Gamble, how much influence does he really have? I mean, okay, we're going to try to unlock value. We're going to do stuff. Can he move the stock 1% or 2%? Sure he can, but this is Procter & Gamble. It's a big, thick stock. People are buying it for value. It's defensive, so I'm still going to trade technically here, and I'll just say huge support down between 86 and $87. Getting a little lift this morning here on the Peltz information. It's up 50 cents at 87.55, but you got some overhead resistance up there at 88. Then you got 89, 90. It just looks thick all over the place. The stock is a thick one.
Yeah, and actually we heard that all I did was I went to Pro and I searched for PG and Peltz, and we heard unconfirmed chatter all the way back of a Peltz stake all the way back in May 2015, but his actual stake I don't believe started until, you're right, it was February 15th, I believe, was the day that he picked up a $3.5 billion, or it was released at least, that he picked up a $3.5 billion stake in PG. So, like you said, this is a big guy. This is a big guy. They're in the top 10, right?
Oh yeah. If this is a smaller issue, the stock moves every time Peltz is mentioned. But it's Procter & Gamble. So do I expect this to take off $2-3 because he's going to get a seat and he's going to get more influence here? No, I do not. I think if this thing got anywhere up into the 88s, which is just up 90 cents, you can see 1, 2, 3, 4, 5 highs. I bet you there's even an institution. I don't have my book open, but I could probably go take a look. But I think there's probably even some institutional size up there at 88. So technical resistance very well defined to me on this, and I think 88 is going to put a lid on it, at least maybe for today. With even though Peltz taking a stake. But funny things happen. You always got to be prepared. You always got to have a contingency plan when you put on any trade. But I think in the upper 87s you find major resistance.
All right, I want to talk about Blue Apron. And I know it's an IPO, and there isn't a whole lot of chart to look at, but I want to talk about this because there was a report this morning that Amazon filed a patent to have its own meal delivery kit service. Which, if you know anything about Blue Apron, that is what they do. That's the business, meal delivery kits, and it was already a crowded space before, and now a week after the patent was dated for a week after the IPO. So a week after they go public, Amazon files a patent to do their own meal delivery kit, and it's Amazon, so you know it's going to be awesome. And I just can't help but think is Blue Apron like the worst IPO of all time.
They've been Amazoned here now too. So not only has the stock went straight down since the IPO, now they're getting Amazoned again. So
they're getting
Amazoned. I guess you said the patent was out there, so maybe that was already weighing on the stock. But it's official here now. Stock is trying trying this morning to hold the $7 area. That's the low. So if you just go and you just look at the dailies, it's like there's only one, two. I can count the days: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We've been around for 11 days here. So this is the 12th day. So all-time low is 708. It's below that this morning. I always say when stocks are making all-time lows, you got to go, especially if you're long. I don't want any part of this thing just because 702. I mean, is there going to be a bottom somewhere? Is there going to be a bounce somewhere? Sure there is. I'm not buying on the day that's officially getting Amazon here, though, and it's making new lows on it. I think, this thing is probably going to see the 6 handle sooner than later, and sooner being maybe before I'm done my sentence. It's at 7 right now. I'm out on APRN. I don't want any part of this.
Someone on the news desk pointed out this morning that the morning of the IPO, the CEO was on CNBC, trying to sell it as a tech company, but no, they sell meal kits. There's nothing wrong with that, but it's a crowded space, and they got Amazon 2 weeks into their IPO. So good luck. Ooh. Good luck, Blue Apron. Jar has a question about ABT. He's looking for an out.
An out as a contingency plan, or an out? Are you short? Are you long? What's going on, ABT? I'll tell you my position, ABT. I have had Abbott Labs portfolio, or in my investment portfolio, Abbott Labs for probably 5 or 6 years. It's been a good one. I actually bought it around 47 or 48 bucks. You can say, oh, well, you're not up very much in it then. Well, no, I am, because it spun off AbbVie, ABBV, which is a 1-for-1 spinoff. So I got a $73 stock out of it. So I'm actually up 73 points in my $48 position because I own AbbVie. I still own both of those stocks. So I'm happy. Abbott's been a good performer for me just because, obviously, of the AbbVie position. And Abbott itself has been a pretty good performer as well. So I bought this back. I can't remember when. I think it was probably 2011. And you can say, oh, I didn't trade 48 then. But again, because it's spun off AbbVie, you have to do the adjustment. The Abbott Labs chart itself will adjust for it, so you just don't see it there. But anyways, it's been a good one for me. I'm still long both these stocks long term. I still like it. Short term here, I can tell you, you had major resistance up there around $51. $51.74 is actually, I believe, the all-time high on this. So you're only at $2.50 away from that right now. You had a pretty good sell. That was back in 2015. You had a pretty good sell-off in 2016. 2017 has been trying to crawl its way ever back since it got up to almost $50 there just about 2 weeks ago. We got up to $49.59. So you were starting to form some major technical resistance up here, just under $50. So, and you have, from before too, I was saying back in 2015, you got highs of 51. So if you're coming in here now, I feel like you're late to the party. Am I selling it because it's getting up here? No, I'm sticking with it. I've been with it for a long time. It's a long-term holding in my investment portfolio, so I'm sticking with it. But if I was in it for a swing trade, I think I'd probably be lightening up. If I was in it for a day trade, well, that's a completely different story. You can go anything for a day trade, and the day hasn't started yet.
All right, where would you like to go now, Dennis? We've got a few stocks hitting.
I've got a few things on my list here, so just jump over. BK, we got a new CEO over at BK here this morning, Bank of New York Mellon. Full disclosure, 53.60. I've got a small short position on. It was trading up $1.50 on this, and I don't know if it's worth that much. So I was nibbling here a little bit this morning. Anyways, 50. I won't talk anymore about it because I don't like talking my book, but I have to disclose. I got to disclose that I got a position in it. Full disclosure. So 53.60 is where it was trading up to. It's 53 and a quarter here right now in odd lots. Bid 53 and a quarter. So it's getting bid up. Give us the news here on BK.
I mean, you pretty much said it. They got a new CEO, Charles Scharf is his name, and they have surpassed a 52-week high on that news.
Been running. It's got a nice looking chart. So not something I'm going to stay short a long time. So just felt like $1.30 is a little bit too much. I'll just stay at that. So technical resistance really isn't there to be found because the stock's been running and we're making new highs. So there's no resistance up here.
All right. I had a few others on my list. Anything big on your list that you want to get to, or can we just run off of what I got?
Yeah, I was going to talk Netflix, VMware tonight. We can get to those in a minute. If we got some Barons, we're going to talk that as well. But yeah, what's on your list? Tell me about your list.
I'll tell you about my list. I had a couple of stocks come out with some guidance this morning. CHD being one of them. Church and Dwight. They came out, first of all, they're acquiring Waterpik for $1 billion in cash. Second of all, they see their fiscal year 2018 EPS at $2.09 versus a $2.07 estimate is CHD.
Oh, and you got a headline on this, and it's wide. 51.91 to 53.71. You basically just have, 100 shares by 100 shares. Zero. There's been no volume here this morning, so we can't get a feel for whether they like this news or don't like this news. It's just hanging out here in the pre-market. I think they don't really care, it seems like. But the stock had a nice move on Friday, so, we'll give you that. 52.62. Closed up fairly strong. You know how I like my 2-day move, so I think you can see a move maybe to 53 area. But, when there's news out here and you don't even have a pre-market yet, I'm going to wait till it digests the news a little bit more.
I had another one, VRX, been on quite a run of late. News this morning that they are selling one of their units, Obagai, I don't know how you pronounce that, that's just a guess. They're selling it for $190 million in cash. I think I read on Twitter that they bought this, you get this guy for 400 some odd dollars. 461 I think was the number, 481, but they're selling it for $190 million is the takeaway here. And I just wanted to bring it up because, look at that daily chart. It's been on the run.
It's been running. And VRX is a classic short squeeze starts at. Now you got longer term investors that are interested in this. I've said for a long time, this is not, I said it back when it was 35. It's not a $35 stock. I said it's a 0 or it's potentially 100. Now I'm going to change that because they keep selling everything. That's bringing the top end down. They're selling stuff so they don't become a 0. So I don't know if they were listening to the pre-market show, but obviously they know that their biggest issue has been debt. They bought too many companies, paid too much premium, got themselves too much in debt, and now they're selling stuff so they don't become a 0. So it's a smart move. They keep continuing to sell stuff off. They do have, a lot of drugs there. They do have a lot of, but the debt is the issue. So as they continue to sell stuff, it becomes less likely to be a 0, becomes less likely to be 100. So now all of a sudden you look at it and you say, okay, well, is it a $17 stock? It's hard to say where the value really is on this. I can tell you right now, it's not a $250 stock. Again, people who think this is going back to the highs, they're selling off, a lot of their good, they sold off one of their best ones a while ago. So they've been selling off a lot of their good drugs just to bring the debt down. They've still got a long ways to go. Debt is still a major issue here at VRX. That being said, we can trade anything from a technical perspective. This thing gets up over 1825. I like it on the charts. But as of right now, it's technical resistance. I said, last week or a couple weeks ago, I felt like when it got up to 18, it was going a little bit too much too fast. It pulled back to 16. Maybe I should have bought. I was hoping it would pull back a little bit further. I did not. Long term, I have no position. I don't plan on having a position. Short term, trend is your friend. The trend is still up.
Speaking of a former Ackman holding, did you ever get around to watching the Bill Ackman Herbalife documentary?
No. How's that?
Betting on Zero? Yeah, I watched it about a week ago. It was fantastic. Highly recommend it. Betting on Zero.
Just give us a quick summary.
Okay. We actually had Quote the Wave in Research. We had him on, I think, when this first came out back in end of March, I want to say. It just tells the story of Bill Ackman's short position in Herbalife, starting from his big presentation he gave in 2014 that he thought would kill the stock. It didn't, and it just kind of tells the story of how his activism has evolved in the 3 years he's been short the stock, and it also goes into Herbalife as a business, particularly how it has sort of infiltrated various immigrant communities across the country, in Chicago specifically, and other areas of the country as well, and sort of how the business is built and why Ackman is short and sort of what's happened in the past 3 years. It's very good. It's not a great look for Herbalife, but they do give equal, I would say, a very good chunk of the film is with the former CEO of Herbalife.
Is he still sticking with it? Ackman's still short this?
I think he was short in the mid 40s, which if you pull up a chart, sorry.
Did he cover any? Because a few times it got low. A few times, it got back to the mid 40s, and even before that, like after his position was disclosed, obviously, it went from the mid 40s, and I believe he said he didn't cover anything, but it went down under $30.
Yeah, I don't know if he covered anything at all, but I do know he was short in the mid 40s, and we're clearly very far away from there.
We're not even that far from all-time highs on this thing. So obviously it's been, another position that Ackman has struggled with. All-time highs set back just early 2014, back at $83.51 in January of 2014. So only $8 from the all-time high. And I'll tell you, man, the one thing I look at with this chart is you are starting to form, you form some major technical resistance just under $75, 74.5 multiple highs. If you ever start trading up over 70, 74, and we're 73.34 today, so we're still ways away from that. But just saying for you swing traders out there, start getting up over 75 is being breakout mode, and then you start thinking, okay, well, you had a big move back in May. Sometimes what happens is, from a technical perspective, is you get a move, and let's say in May it gapped up from about 62 up to about 60. Let's call it 63 up to about 73, 10-point move. So a lot of times you get a consolidation period where it digests that move, and then a continuation of the original move. And if it did that, it would put you back up in the all-time high. So I think if it goes up to 75, I think you might see the stock at 80. So as of right now, it's still technical resistance. Resistance is resistance until it's broken. But breakout above 75, and I would like it. Right now, I have no opinion because I don't know if that resistance is going to hold or if it's going to break. But if it breaks out over 75, I think I'd like it from a technical perspective.
The all-time high, 83.5. You seeing that too?
Yeah, that's what I'm seeing.
Oh, man.
Although I only have 10-year charts, so if it was before that.
Right. Okay. Two stocks I wanted to get to that are going ex-div today: Clorox CLX and Oracle ORCL. Which chart shall I pull up?
What stock's Clorox? It's defensive stock. Stocks, and there's one thing here. And, as a long-term investor, and I've said this on the show a million times, I am a momentum trader. It's like going with the flow when I'm trading. For my swing trades and day trades, I like going with the flow. Don't like fighting the tape. As an investor, I am a contrarian. I like it when everybody else hates a stock. That's when I stick it in my invest portfolio and I don't look at it again. I'll tell you, Clorox, everybody has loved Clorox for a long time. It's maybe not cheap enough for me to stick in my invest portfolio, but it's starting to get a little more intriguing because it's come down significantly. And why has it come down in the last month? Because interest rate concerns. But now those interest rate concerns are a little bit lighter there because of what Yellen said last week. We know, that they're being a little bit more dovish here now. And I think some of these stocks that have been absolutely murdered here on interest rate concerns could start to show some life, although they didn't show much life on Friday. But that being said, Clorox ex-dividend day today for 84 cents. 31.90 was the close. The adjusted close is 31. Actually, wait a second here. Why is my system not working? 31.90. I believe the adjusted close is 31.06. Yes, adjusted close is 31.06. So if you're trading Clorox, close is not 31.90. It's 131.06. These kind of all move together. Procter & Gamble, Clorox. You could say even, like the Coca-Colas, Johnson & Johnson to a certain extent, although it has some drugs in there. I mean, these are defensive issues that actually move around with interest rate concerns more than anything, really.
The other one was Oracle. It's also ex-div today.
Which is a stock that seems, and I have this one in my investment portfolio. It's been one of my best ones. I bought this during the financial crisis, I think, at $9. So I'm sticking with this one. It's 50 now. I'm sticking with it in my investment portfolio. It's been a good one here. That is just 1.51% dividend. Dividends come down a long ways. It had the big gap up on the last earnings report, which was, I was happy about that, but I was shocked at it as well because it gapped so much in such a big stock. It dipped, it tried to fill half of that gap, but then it's been climbing since. So now it's starting to show life here again. And the way this market is, trying to make all-time highs or making all-time highs, I wouldn't be surprised if Oracle eventually does test the $52 area here. 50.47 was a close, or 50.56 was close. Adjusted close is $50.37 because it is 19-cent ex-dividend here today. Trading up a little bit here on the pre-market. Last 2 days highs in the same area around $50.65, 50.67. Get above there, and I think it starts to move towards 51. This is a slow-moving tech stock, though, so don't expect like these big returns off that you're getting off some of these other tech stocks because Oracle is a little bit more slower-moving one, although it did have that big gap up day after earnings.
All right, another one I had on my list. I don't think we've ever discussed this on this show, so it's fitting we talk about it when Joel's not here. But Churchill Downs, CHDN, did have some guidance today. Actually, they just really reaffirmed their guidance. Let me pull up the headline of the chart there. They see their fiscal year EPS at $1.92 versus $1.93, and just basically reaffirming that outlook.
Joel, we want to talk horses all day, right? If we talk about this.
Yes. I don't think we've ever brought this up on the show, which I think is ironic because Joel's gone. So
it's funny that we never brought this up with Joel being such a horse lover and everything, and that is mean to bring it up the one day after he leaves. Anyway, CHDN, so no trades here this morning, so it's hard. And look at the spread. The spread is 5 cents to $199,999.95. So you got 2 stub quotes out there. So there's literally no market in the stock right now. So it's very early, too early to make a market in this thing, and nobody's coming out there and saying I think this is going up or think this is going down. So I'll just give you all we have is the information from the last trading day and the information from the technical chart, and I'll say that it's got major resistance up there at the 185 area. It's kind of been in a channel. We've put multiple lows in the 179 area, so I'd trade that channel until it's broken. 179 to 185, I'll call it.
I thought horse racing was dead. The stock's been on a move.
Unbelievable. Yeah, no, it's been unbelievable. Look at the monthly. 2011, the stock was $40. Now it's 180. Bull market.
What happened? I thought
bull market.
Well, yeah, I guess
everything goes up.
I guess that's
it's a bull market.
I guess that's what happens in the bull market. All right, 8:30. Can we get a quick and balanced look?
Go take a look and see if we see anything jumping out at us. Alibaba, every single day the thing's up, and every single day it's got a 46 or a buy and balance on the pre-market. 46,000 shares to buy here this morning. Alibaba new all-time highs on Friday. I was saying above 150 and it being breakout mode. The breakout does continue. We're now at 153.5. If I'm not a big Momo fan, but if I was in any Momo stock, I would be in Alibaba. I like that one still. Ford, 104,000 to buy. Ford had a pretty good day on Friday. So did General Motors, actually. Those 2 stocks. A little bit of rotation you've been seeing, stocks. You've been seeing some of the value stocks show some life there. Ford and GM, obviously, 2 value stocks. Coca-Cola, 49,000 to sell. Bristol Myers, 30,000 to buy, which is BMY. Merck, 28,000 to sell. That's going in the opposite direction. Twitter, 19,000 to buy. It's approaching the critical $20 resistance psychological level there. We know back here, actually, if you go back, we got to 1978 back on May the 16th. Interesting enough, last couple of days we've just been quite under there. We did get to 1997 though on Friday, so $20, the psychological level still working there. If you go to the weeklies on it, you can see multiple highs at 20. That's the area it needs to get above. If Twitter gets above 20, it'll be back in breakout mode again.
All right, John Donaldson brought up Netflix, and we'll discuss Netflix with our guest Scott Redler in 3 minutes, but they are the big report of the day after the bell. They're due. We are looking for a 15-cent EPS and a revenue of $2.76 billion. Any quick thoughts, and we'll get Scott's thoughts as well. But any quick
Stocks
thoughts?
Run up into the earnings. I actually had it. I took it overnight long. I actually already sold in the pre-market, though, because I took it for the quick $1.63. A lot of times it just plays to take them, a couple days before the earnings because they run up into the earnings report, and that's what's happening here again. We don't know after the earnings report this thing's going to probably pop $10 or drop $10 depending on all the numbers and their earnings. But just looking at it from a purely technical perspective, you've had a pretty good rally from the July low, which was just 6 days ago, down at $144. We're now trading 162. So classic earnings run up here, moving along with some of the other overall market and some of the Momos too. But the earnings run up is helping it as well. Stock could get up there today to 164, 165, maybe ahead of the earnings if it continues to run up ahead. Maybe you have some people looking to book some profits there too. Like I said, I already just booked some profits here this morning. So if people are like me, maybe they're going to book profits a little bit early. I'm not holding this for earnings though, because this is a stock that's going to be wild on the report.
They've only missed their EPS estimate one time as a public company. That was in Q3 of 2015.
But what's the EPS estimate? Do you have it in front of you?
Yeah,
what's the EPS estimate?
15 cents. So
they never make it. This company's just, the multiple's crazy, and
yeah.
I don't totally get it up here. And this is just long term thing, and people hate me when I dog Netflix because it's been a great company. Michael Pachter, we know has been had his price target very low on it, and he's been proven wrong, and I've been proven wrong on this too because I've not been bullish the stock whatsoever. I haven't had a position in it, but I don't totally get it from as a value investor. I don't get Netflix, and then I don't get it also. I think there's eventually going to be some competition there too. One thing is it's killing the cable companies. I think everybody's dropping their cable, although you wouldn't see it in the chart from Comcast, which I would think it should be killing the cable companies. But you can get a $10 Netflix account. A lot of people watch Netflix. I just don't totally get where the growth is going to continue to come from.
Well, Comcast is an ISP. They're an internet service provider. I think they they have a monopoly, so I don't think
they're not just cable. Yeah.
You're right. They're not just cable. Netflix. Yeah. Do you have your own Netflix account, Dennis, or do you mooch off someone else?
I have my own Netflix account.
Okay, I don't. I moved.
Yeah, don't say that. They're gonna come shut you down now.
No, who was it? I think it was maybe it was the HBO guy.
Why? Yeah, mooching on somebody else. That's an issue for them too, I'm sure.
Maybe it was the I think it was HBO, the CEO, who said, "We don't mind when people do that because the more, in our eyes, the more people that watch, the better. So we don't mind sharing accounts." But regardless, 8:35 now. We're gonna take a quick break and grab our only guest of the day, Scott Redler, chief strategist at T3 Live and the T3 Trading Group, is going to share with us his technical thoughts. So we'll be right back with Scott. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel. Oh, not Joel. I'm so used to saying Joel that he's not even here. Dennis Dick with me today. We're on the line with Scott Redler, chief strategist at T3 Live and T3 Trading Group. Scott, how's it going today?
Going good. How you guys doing?
We are going well. Want to get right to your note. You were talking this morning about Shanghai. We had some numbers there over the weekend as far as China is concerned. So give us your thoughts now on macro, broad macro outlook for the U.S. and foreign markets.
Well, if you look at my note, just the first paragraph, I always just quickly touch on the overseas markets just to see if there's any narrative changes. I don't think we've been too hyper-focused on China at all. So with, back in the day when the Shanghai is down 1.4%, you would probably see our futures get hit. At this point, our futures are flat, and so they kind of avoided that subject or didn't even, look at it. The GDP was strong, but then I think the government talked about some risks and some controls, and it was a little volatile over there. But overseas, the narrative stayed the same. Europe's been, on the move to highs and pulling back a little bit here and there. And the markets obviously just made all-time highs. And, at this point, it's just, slow and steady, picking spots, trying to find really good trades and stay in some kind of portfolio approach as we enter earnings season.
Looking at the financials, obviously a big day on Friday. We got some more. We got some more financials this week. I'm going to pull up the XLF. What are your thoughts here?
My thoughts are that they kind of held where they had to on Friday. J.P. Morgan, if you remember, was up like $1 at 7 o'clock, and then all of a sudden they sold the news. But if you look here at the XLF, you'll see that it did come in and hold the 21-day. So that was 2460-ish area. So at this point, I don't think the banks lead this week, but I don't think they fall apart either. If you're in the financials, you could put your stop in the XLF at 2460. That's where we bounced off of. And then if Goldman Sachs or Bank of America tomorrow act better, potentially they get more in play. But I don't think there's going to be over alpha focusing here on the financials. They just probably need a little bit of time, for people to forget that they sold J.P. Morgan for a day before it actually gets back underway towards the 93 to 94 level that it just saw earlier last week.
Scott, Dennis Dick here. Just a question here. Just overall strategy for you, because obviously you're a technical trader here. When you have like fundamental information like an earnings report coming out on these stocks, do you take a position technically ahead of that, or do you back off because the information's coming out there and then wait for the technicals to work themselves out?
I rarely take any stock into binary events. So earnings to me is a binary event, and it's kind of like a guess.
Yeah.
Sometimes the chart will is it under accumulation? Has it been steady? What do people think are going to happen? Is it trading at all-time highs, thinking that they're going to crush numbers? So it gives me clues on how to trade it after. Sometimes if I have high conviction in the name and I don't want to miss a move, I'll buy options just because at least your risk is premium paid. I'll do maybe a call spread depending on what kind of premiums are there. But then also I go into each report with a plan. Like tonight, what's going to happen with Netflix? Netflix isn't going to be enough to make it go to all-time highs. So what I'll do is I'll sit there with Netflix. I'll look at the all-time high pivot. I'll look at support. And then if the report's strong enough, and it acts well, maybe I could still buy it after hours. And if it holds that, all-time high pivot, which if you look like, just say for Netflix, because we'll talk about it because Netflix is coming out.
Sure.
So the way, I would trade is if it's a really strong report and just say gets above 168, you're going to see a squeeze and you can make some money up to maybe 175-ish or something. If it gets above there and doesn't hold it, and starts selling down, perhaps tell me, okay, it's kind of priced in. Tech just had a big move for the last week or two. Be a little bit more careful with, the other FANG names. So, I use earnings reports for information on how they're treating these things before or after the print. And if it's a nice tight pattern, I don't want to miss it because it could gap up huge or get halted. I'll go with options, but I will not take the position into earnings because, that's how a lot of traders have blown themselves up, whether they think it's a short and they go short and it gets, goes
Right.
huge upside or vice versa. For
Well,
an investor, and you've been in it for years, that's a different story. If you're trading for alpha, cash flow, and for a monthly P&L, I would always suggest do not take stocks into earnings. Trade them after or do options.
second thing is that you do have a lot of traders that try to trade this after hours, and you see whipsaws, you see stock, has a good earnings report, starts gapping up $2, $3, $4, but then all of a sudden sometimes they pull the rug out from under and then it starts to collapse there. How do you not get caught in the whipsaw after earnings if you're trading after hours?
Well, first, it usually has like a big move, and then I would say after 5 to 15 minutes, it usually stabilizes a little bit. If you want to get the fast action, it's risky. You could all of a sudden, Netflix could go trade through 168.5, and then all of a sudden, they could start talking about expenses or talking about overseas not growing, and then all of a sudden, there's not a lot of liquidity. So I wouldn't recommend trading after hour earnings if you're, a novice trader. But there are traders out there that can make a living because you can get a move in 15 to 30 minutes that could usually take you an entire day to get if you're trading something else that wasn't earnings. So if you're right and you're fast, it could be, big money, but it is speculative to be trading after hours.
Let's talk some of the other big Momo names here. And Alibaba has been a monster here, made new all-time high again on Friday, breaking out over 150. I mean, this stock has just been an incredible chart. If you look at just even the dailies on it, it's pretty much straight up here. What are you seeing in Alibaba technicals?
It was awesome. If you think about Baba, okay, when we had that little tech pullback, okay, the Qs went below the 50-day moving average. Baba held the 21-day. So right there, it told you it was stronger, showing relative strength and a leader. So as soon as the Qs bounced, you had a viable pivot of 145. So watching that trade and hold up, that should have been on every trader's radar to when we get that bounce for it to be the first to make, new all-time highs. And it did it, and it's great to see a stock like that actually follow the technical rules, show relative strength, and then get a breakout with follow-through. Here, today at 152, 153, if you missed the move, I wouldn't recommend initiating a new position. But Baba told you that the tech bounce was more than just a feeble bounce to get rejected because it showed power. And if the tech bounce was going to be feeble, they wouldn't let many stocks break out. And Baba was a good stock to watch, to trade, and also give you some clues that maybe other names can be bought. NVIDIA actually did pretty much the same thing too, where it held above the 50-day and was one of the first stocks to get back to all-time highs. And also Facebook, right? Facebook, we claimed the 50-day, made new all-time highs, and had a little follow-through. So the names that held up best while the Qs had this, little 5.5% move off highs were the ones that actually led last week.
I mean, a lot of the Momo names have all come back here. Like you said, Amazon, Google, not that far off their highs there too. One that is significantly off its highs, maybe just because it got a little bit overdone, is Tesla. It got up to 386, and then we know it had the big 3-day down move. Maybe Goldman having something to do with that too, with reiterating their sell rating on the stock. But Tesla here is trying to bounce back a little bit the last few days, consolidating here a little bit in 327. What do you see in the technicals in Tesla? Because a lot of our listeners like to trade this stock.
Well, first of all, last week at this time, it was like my A setup where you had that red dog reversal. I've talked about that kind of pattern to you guys many times on the show where, that little bit of a rubber match, right? Was Tesla going to get below 306, hold below and get down to 280? That's what the Bears wanted. But what did the Bulls want? They wanted it to get below come back above, trap some shorts, and give you a viable setup. So that setup was buying it at 306 versus that low, which was 303, and this was on, that was the date was 7/10, July 10th, a week ago today. So now there's a different setup. The question is, can it hold 320, go a little sideways, and then clear 329 to 333, and then tag the 50-day like a lot of the other, tech names have done. So I'm actually flat tested, but I'm looking at it. If it can get above and stay above 329 today, there's a pivot at 333, and then real resistance doesn't come until about 338. And if the bears want to be right here, they need to reject price there, because the bears are already talking about a head and shoulders top formation coming in with 338 to 340 to be the top of that right shoulder. So between now and then, there could be a cash flow trade. So I would say, Friday woke up a little bit, it held 320. So now if it could get above 328.50, there's probably another trade to at least 333 or 338-ish before sellers come back.
All right, Scott, I want to bring up some biotech names you have in your note this morning. One of them being AMGN, Amgen. You say you hop back in, or somewhere along at 170, or hop back in when it took out a 174.50. It has room back to 180. Elaborate on that.
You know what? I've been watching the IBBs, okay, and I like the setup there. The IBBs had a big run a few weeks ago and was flagging. So last week I got long the IBBs, prior 11, because you had big support at 308, and I said if the bios are going to run, the two leading stocks right now are probably Celgene and Amgen. They're the best setups. So if you want to be in the IBBs, you could probably also be in Amgen and Celgene. You could do it two ways. So with Amgen, I'm like, you could be long versus the 21-day, which was the support of that upper flag, or I wait till it takes out 174.50 to get in motion, or you can do both, buy versus support and then add when it gets in motion. So at this point, Amgen triggered above that 174.50, so it would be good if it holds that, and looks like it has room all the way back towards the 180s. And so if the bios are going to break out, they need some leadership, and Amgen and Celgene were the two that I was focusing on because they had similar patterns to the overall ETF.
What about one that we brought up earlier on the show, VRX? You did say in the note, as long as it holds 16, it also may take out 18 in a quarter.
Yes, this is a broken name that does move fast. At times it kind of woke back up. If you look at the chart, it had that big high volume breakout on, June 22nd, and now it's trying to flag above the 21 days. So the reason why I write verse, because sometimes you pay up for it and it doesn't work, so you want to be long versus a level. And if you look at the little pivot from July 7th, it hit a low of like 16-ish. So there are some thinking that this is going to get into the 20s, and if that's the case, it's got to hold 16 and then get in motion above this recent, 1780 to 18 and a quarter area. If it gets above there, there's still a lot of shorts in that name. Perhaps there's a trade there. It's one of those names that I wouldn't be taking overnight. I'd love for it to happen intraday, because sometimes you see the volume, etc. Because with individual bios, you're always at risk at them coming out with something, especially with the history of VRX.
Here's one that we used to talk a lot on this show, not so much recently, but GW Pharma. What are you seeing in this chart?
In which one?
GW Pharma.
What are the symbols?
GWPH.
Something that
GWPH.
Oh, GWPH. I'm sorry. You know what? There are a lot of guys that I talk to that love the big picture here in GW Pharma. Obviously, the marijuana industry, et cetera, et cetera. This has been a class of that. So if you see on the bottom of my note, I have calls. So what I did is, on that pullback into in June when it broke below 100, it was as high as 138. I'm like, you know what? Let me just nibble on some calls on weakness because they should have data in August. I will not be in the stock for something that has data, but if the data is bullish, it could get above 138, 140 and get to where some of these big analysts are projecting. And so it does trade intraday, but it's the type of thing where you have to go out multiple months, pay a little premium to hold it, if you want to be in it for what could be, a big gap up on news. So I think they're expecting some data in August, so I'm in some calls for that.
Some of these other notable stocks we've talked about recently on the show, but one we've been talking about the last few days has been U.S. Steel X. Stock has been coming back here. Trump tweet helped it a little bit there a couple days ago. It's a stock that's been left for dead just, before May, after obviously coming from the beginning of the year was over $40 to falling under 20. But it's finding a base. It's trying to come back here. What are you seeing on the U.S. steel chart, which is symbol X?
I've tried to play two the last month, and it just doesn't have momentum. Up one day, down another day.
Yeah.
It's not a great vehicle, but it does seem as if you have this lower base, and if it can get above, to say 24.40, there's a huge gap that goes all the way up to 30. So I think some traders are kind of, eyeballing that maybe if you can get in that gap, with some volume, that could be a good day and a half or 2-day trade there. Especially again if you get another Trump tweet about tariffs, et cetera, and if you didn't get caught from 40 on the way down here around 23, 24, it's definitely worth keeping on the radar. But again, it's not, there's not much continuity. It just had its first 4-day move in a row, and it's above the moving averages. I would say I'd rather see a trader maybe say, okay, I'm going to be long verse 2250, which is the 21-day, and if it happens to get some news and trade some high volume, then add on strength, and that gap starts right around 24.37.
Hey Scott, question from the chat: would you trade AABA with BABA, or just or instead of BABA, or just stay with the BABA trade?
Would I trade which one?
AABA, Alt BABA, as I call it, the new Yahoo.
BABA tracking stock.
It all depends. Depends on your style. I feel like because this one's 58-ish. People feel like they're more comfortable because the ranges aren't as big. I personally just trade BABA, but if it correlates perfectly, why not? Some people say, hey, I'd rather take 3,000 to 5,000 shares of a $50-something stock versus 1,000 or 1,500 of 150. I think it's just based on preference on what you like to trade and how many shares you like to trade it.
All right, we've been on the line with Scott Redler, Chief Strategist at T3 Live, and the T3 Trading Group is where you can find all of his daily analysis. He's got his note, he's got his technical charts, really great stuff. Highly recommend you check it out. T3 Live, Scott Redler. Thanks a lot for hopping on today. We will talk to you again soon.
Thanks for having me, and have a great week.
Thanks, Scott.
All right, 8:51 now, Dennis. What should we hit? There's a lot that we ran through this morning.
There was a ton of ratings today. No big ones though. Whoa, look at this one. Yeah, it's a lot of smaller companies here. Do you want to just quick give us a couple highlights?
The only one that jumped out to me this morning was Booz Allen Hamilton, BAH, called a downgrade there from Jefferies. They're hopping on the downgrade train since the beginning of May. Barclays, Vertical Research, Raymond James, Drexel, and Jefferies have all downgraded Booz Allen Hamilton from.
That's analyst chasing price. I mean, they waited a little while to chase this one because stock has come back from its lows there. What was the headline that it gapped down on? Because I forget. Goldfish memory on me. What was the big headline with Booz Allen that it gapped? If we just look back in the charts on the 16th of June when it gapped down to $31. What was the headline there?
Yeah,
you remember?
Yeah, I am.
It was. Joel remembers.
It was costing. It was accounting. It was accounting. Investigation. Accounting issues.
And I always follow the Kramer thing when you have accounting. When it's accounting issues, Kramer says accounting issues equals sell. And Jim Kramer, love him or hate him, he gives some really good advice a lot of times. And I agree with that. I mean, when you've got accounting issues, you don't know if they're cooking the books potentially, or if the books aren't being cooked right. That is an issue that no fundamental CFA sitting down and crunching numbers can account for. Because if you're crunching numbers off the books and the books are wrong, well, your numbers are no good. So it's so difficult. So I always say too, when I've got accounting issues, I'm hands off. Maybe it's just something that's been an error, but maybe there's something else there too. But Kramer says accounting issues equals sell, and I'm not going to argue with that. So I don't want anything to do with this as long as the accounting issues are still outstanding.
The only other big name I saw this morning was Restoration Hardware. RH caught a downgrade from KeyBank. They decided that overweight was just too much, so they're down to sector weight now. But that was the only really other big name that I saw. Just Booz Allen Hamilton and RH, like you said, Dennis. Not a lot of ratings, but a lot of
ratings, a lot of smaller companies.
Yeah.
So if there's anyone you want us to talk about specifically in the chat, or you can tweet at us too. I'm Triple D Trader. Let us know, and we'll talk about it here right now. But RH, I can just say briefly, it's another stock that's been going straight up. We know it's been an unbelievable issue. I mean, it's been going up, and Joel and I have dogged it for a long time. I'm just not going to say anything about it because I've been wrong on this thing. It's pulling back here $1.50 here this morning, but holy cow, stock's been a great one.
Anything else on your list this morning, Dennis?
Lots of little things. I haven't talked to Apple here yet, and obviously a lot of traders trade Apple, and it's been showing a lot of life the last couple of days. So you had, a lot of the Momos coming back here, and Apple's definitely not a Momo. I call it kind of like the value, but it's been trading as a Momo lately because it's been trading along with them all since it's had its big run from 110 to 150. We know I sold half my investment position right around this price, 148, 149. I can't remember the exact price I sold at. That was before it had the run up to 155. I mean, it's getting back up into an area that it came down from very quickly. Stock went from 155. This was on Citron Day, down to 146 when Citron dogged Nvidia. We know a lot of the Momos fell out of bed that day, and Apple was one of them. Apple's trading a little bit like a Momo, but I still consider it a value stock. I still like it. I still have it in my long-term investment portfolio. I still think it's one of your best value Momos out there. Formed some nice consolidation between 143 and 147. It's trying to resolve it to the upside. There is some room to the upside here still too, but 150 is a big psychological level, and that's going to be the first hurdle. It's trading at 149 here in the pre-market. Let's see what it does at 150. If it can get up over 150, then you can talk about moving up that rest of the area, maybe the 155. But I think the first area of struggle for this is going to be 150.
Speaking of phones, Downward Dog wants us to talk about BlackBerry. So BBRY. Man.
Oh, this is what I'm so torn on. So patents, we got some value. I like the technical setup on this right now, and I have been looking at this thinking, man, if this thing could get above $10 and hold it, and I know we snuck above it a few days ago. It's forming some major resistance right around 10, but it kind of looks like it wants to go to me. We've been going down here, and we've paused. Now you almost got a little cup and handle thing forming here from the last week or two. I like it above 10. Like if it can get above and hold 10, I think you could have a little bit of room to the upside. Long term, no opinion here. I mean, the thing's been killed from its all-time highs. The patents are probably worth some money. Maybe they can figure out, other ways to monetize this thing. So I have no real opinion long term, but short term, I don't mind it here. I think you get above that 10.04 high. I think you got some room to the upside. So I like it short term.
I'm looking at StockTwits right now at the list of trending tickers. We covered just about all of them. We didn't cover Visa.
we covered a lot of stocks there today.
We didn't cover Visa.
What did we miss?
Visa, and there's no news this morning on Visa. It's just it's a
monster. All-time highs. MasterCard. I've had MasterCard. This is maybe one of the best stocks I've ever had in my investment portfolio. I bought MasterCard. My buddy Chris Banny is like, you got to buy this MasterCard and Visa. This was back in like 2000. I think it was even maybe before the financial crisis, but it might have been during the financial crisis. I think that's why we got it so cheap. He's like, you got to put this MasterCard and Visa in your portfolio and just forget about it. The prices were too cheap back during the financial crisis. I'm averaging on MasterCard at $16. I still have it in here. It's 127 now, so I'm up like 1,000% in this thing. I'm sticking with it. I mean, I'm up 1,000%, and I think I'm safe there with my 16 cost basis. I have sold some stock. I've sold my original cost out of it. A lot of times, and Kramer says this too, and a lot of times I do it too. When a stock doubles, sometimes I sell half, and then I'm playing entirely with the house's money. That's long-term investing, just a Kramer tip, and that's one that I kind of follow as well. Sometimes I do it, sometimes I don't. Sometimes I, wait for a little bit longer. But I've sold more than half of my original investment in this now, so I'm just playing with the house's money. I'm sticking with MasterCard here, and Visa moves obviously with it as well. Visa's got 100 on the mind. I think it eventually sees it. MasterCard's been a monster too. Both these stocks breaking out, making new all-time highs. Both have been just unbelievable performers for the last decade, really.
Last one we'll get to from the chat. Downward Dog wants us to cover ADNT. Small
little company.
Yeah.
I do not know this company. So Adient. and no market in it this morning. All I can tell you is from a technical perspective, because I do not follow this company fundamentally, broke down back in June from 70 down obviously to $61, put a little triple bottom in there. Been climbing ever since. Where's it climb back to? Right back to its point of resistance where it broke down from, which is the 70 area. So you got three highs right in the same area, 69.84, 69.78. You did get above it on Friday, $70.09. Does that mean we're breaking out? I don't know. So I think it's forming some major technical resistance around 70. It's been a pretty good comeback here in the last month for the stock. I think if you're coming in here now, I think you're late to the party. Do you try for a short at 70? I mean, you got an out. You can put on any trade as long as you got an out. So I would say if you are shorting it, I wouldn't want to be short it significantly above $70.
All right. 8:59 now. I'm going to wrap us up for the day. Before I do, I want to tell you about the second event on the Benzinga event calendar of the year, the Benzinga FinTech Summit. It is kind of like our FinTech Awards we have in May, but on the West Coast in San Francisco. It'll be Thursday, September 28th. If you're out on the West Coast or in that area and you want to know more, go to bzsummit.com. You can also email events@benzinga.com. There will be live demos, panel discussions about AI as it relates to trading, and obviously a chance to network. Kevin O'Leary it looks like he will be there. I'm looking at the tentative schedule right now. So bzsummit.com if you're interested in attending that event, and again, events@benzinga.com to learn more. If you want to have any questions, you can check that out as well. As far as listening to Pre-Market Prep, you can do that on our podcast, which is on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or Pre-Market. You can also subscribe to our YouTube channel. That's Benzinga TV to get alerts when the show goes live every day. Don't forget to like us on Facebook as well and follow us on Twitter @Benzinga. And that's all I got to say. So 9 o'clock now. We got a half hour until the open. Hope everyone has good luck today. Good luck out there. And we will see you folks tomorrow. And be sure to discuss that Netflix earnings report. In the meantime, have a good rest of your day.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.